Okay, g'day, Rudy here. 22nd of February. I'm doing this video so it applies to you if you're in the high growth option of your super fund, or you're a VAS, VGS, VDHG investor outside of super. The reason for doing the video is I was prompted by a question from a subscriber about rebalancing a portfolio. So I thought I'd do this video. So what we're looking at here is VDHG, which is effectively your growth. When you tick a box, this is what you're getting. So have a look at it. Australian shares 36, international shares 26, international shares hedged 16, international fixed interest hedged 7, international small companies 6.5. Emerging markets 5, Australian fixed interest 3. So they keep this pretty static, and that's where this rebalancing question comes into it. So what happens if international shares grow a lot outside of this range? Then they'll sell international shares and go and buy more Australian shares. So they try and keep at all times this allocation here. Now I'm not a big fan of that, and I'll get into that, but it's led to some interesting switch ideas for you at the moment. So let's start with VAS, which is the Australian share option. Okay, so that was so we look at here. So it's 36%, so just over a third of the VDHG or growth option is in VAS. Okay, so this is the chart of VAS. All right, so what we do, if we go, before I show you that, and then, so this is VGS, which is, if we look on here on the VDHG, so VGS is basically the international shares here, the 26%, and then VGAD, we'll get to it, is the hedged version. So that's what, and you'll see all share charts go from left to right. They generally go up, but they go up and down at different rates, and that's what we're going to be looking at. So what we do is we take the VAS. And if we do the ratio to VGS, okay, so coming down means VGS is outperforming VAS. So since 2015, you can see down here, 38%. So VGS has outperformed VAS by 38%. So if you, instead of investing in VAS, you just invested in VGS, you'd be 40% better off. Okay, so you really haven't wanted to be in international shares. But we've got this interesting bottoming price action here, which is telling me that VAS is going to outperform VGS going forward. Okay, so that's interesting, really. What about VGAD? Okay, so hedged internationals. Okay, so you can see here over. Oh, okay, so again, you didn't want to be in VAS for a long time, but we've got VAS making a bottom against VGAD. Okay, well, what about emerging markets? So there's a relationship going on here. So there was a bit of a, back from 2014, won't bore you through it, but essentially you want to, so up here you want to sell VAS and buy VGE, and then you want to sell VGE and buy VAS. Like if you had done that switch back here, 35% more. Okay, and you can see here again we've got a bit of a sell VGE buy VAS. Okay, all right. So the other, so what's the other part of is the, so emerging is only 5, but I'm just making a point. International small companies. Okay, there's a little bit of that. So that's VISM here. That's international small companies. So we take VAS and we divide it by VISM. So we get another sort of ratio. So this is when you want to sell VAS and buy VISM. So we're now in a sell VISM, buy VAS, because if the cycle continues, it means VAS is going to outperform VISM by 17%. Okay, so that's VAS about to outperform all those sectors. So I guess the final one is, okay, so about VAS against VDHG. So this should show a buy. And look at that, it does. So here you wanted to sell VAS and buy VDHG. So we're now down here where we want to buy VAS and sell VDHG. So this is telling us that if you switch your high growth option to VAS over the next few years, your super will grow by an additional 12% if you do that, because this is saying VAS is going to outperform. So rather than sticking to this fixed thing, because as you've seen before, you really didn't want to have any money in Australian shares. You just wanted to be loaded up on international shares. You would have made more money. Or the other option you can do, if you're in something like Australian Super or whatever, you can build your own share portfolio of Australian shares. Because we know VAS is going to outperform VDHG. So this is what I do on the channel, $10 a month. You can join. We do daily, weekly videos on building portfolios. So at the moment we've got a model portfolio in Australian Super. So it's up 60% in the last 12 months. So if we go and compare, so this is we've got this is essentially the portfolio here. And if we go and compare it to VAS, so we can see we've been outperforming the VAS by 45%. So that's saying go and build your own share portfolio in Oz Super, Host Plus, or whatever you're in. Or if you don't want to do that, then yeah, just switch your high growth to the Australian share option. All right, I hope you got some value out of that. If you're interested in all this stuff, as I said, join the channel, $10 a month, cup of coffee. All right, see ya.